Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Chelsea Oliver. Welcome to today's morning call. We have mixed markets around the world today. Japan rallies over 1% with the yen getting a bit weaker. Europe started lower yesterday, now is flatlining. Do you think overseas is more of a tailwind rather than a headwind today?
I think with the Nikkei being up like 1.1%, that's probably helping our markets a little bit, or our futures, and Europe started lower based on our weakness yesterday, and now it's flatlining. So a little bit of more of a tailwind versus a headwind. I think traders would have much rather the Nikkei be down 2% and futures following through to the downside, but we haven't seen that type of action within the past week or so. So anyway, you look overseas and just say here, take a look at the FXJ, which is the yen, which is the currency, and as long as the yen goes up, the Nikkei goes lower, and that hasn't been good. So now there's talk that there could be intervention. So maybe a little bit of a move lower to fill this gap, and that keeps the Nikkei afloat. Anyway, you look in Europe, still very choppy, still broken. Europe's been a big laggard. It's still below this entire trend. It's below the 200-day. You have another lower high here. You held the 50-day, rallied back, and kind of failed. Still very lethargic. I would say more of an out-of-play headwind versus a tailwind overall. And then if you go to the FXI, China's actually acting a little bit better, but also below the 200-day, still in this downtrend. And if you take a closer look here, you did have a 3-day move, but not the most convincing. So anyway, as long as I'd say the FXI stays above this spot, or maybe even if you want a little bit tighter, as long as it's above 32, it's a bit more of a neutral to tailwind versus a headwind. Below this, all of a sudden you'll start hearing about China again, and it's still on the right side of this trend line. So we'll see whether or not it starts to roll back lower and then create a bit of a head and shoulders rounding pattern. But that remains to be seen for now. But at this point, for today, not a tailwind or a headwind.
We had another sell to strength day yesterday, making it 2 days in a row, probably frustrating some traders. S&P futures are up 5 to 6 handles. Do you think that we sell the strength again today?
The magic word was probably frustrating traders. For the past week, we've had this random erratic movement. And for 2 sessions in a row, on Friday, gapped up big, and they sold it to take it red. And then yesterday, kept it strong all day to then sell it in the last hour or two. So typically, to me, that's bearish action. That's not the healthiest environment, especially if you come in flat, you work yourself into some long positions, in the first hour that are acting well, and then by the end of the day, we're at the low, so anything you bought intraday, you're down on, and then you get out, and then you gap up the next day. Well, anyway, today's gap up is not as strong as the past two. We'll see what happens here. If you look at the chart of the SPX, you will see that you do somewhat have, this defined resistance where, it's kind of hard, when you're short and it pushes above a prior high briefly and then fails, because typically a lot of traders use that as a stop out. So anyway, if you did, it happens today with the futures up, maybe try and short a little bit, because if all of a sudden it starts trading below yesterday's low, you could finally maybe get some downside follow through. So 2041 is one spot, and then you have this 2033. So maybe into the 8-day, which is closer to 250, puts a 30-minute high in, you short versus that, and then if you see some of the continued weakness like we've seen, maybe we do get some follow through. But overall, we're still just in this range, a very choppy range that if you buy strength, you're not feeling good, and if you went home short this day, had a little bit of trouble. If you went home short yesterday, it seems like you might have a little less trouble, but very, very choppy, and at this point, that typically, to me, feels like it's going to lead to some kind of move down to the 200-day, which I talked about on the CNBC.com, a little bit closer to 2018.
If you look amongst sectors, same thing happened again. Technology, small caps, and bios got rejected at resistance. What are some pivot levels or support, should I say, that are important today?
I think yesterday's low is probably the one to really watch to see if we could break below and stay below, or break below, get below, chop some shorts and come back above, which is the red dog reversal strategy. So we shall see. The Qs have a very well-defined upper support. You take a look here at the Qs. It hasn't been able to break that yet, but it seems like it's vulnerable, But support is support until it's, broken, and did the same thing here. So at this point, right down 108.58. Okay, you had another, push-through failure. Some people might have used it as a red dog reversal when it went above this 110.02, went above by actually matched it and then reversed lower. So anyway, a break below this spot, and you at least have the 21-day, which is about 70 cents below, and then you have the 200-day. If you look at the IWM, this put in the same type of thing where this actually had the strength enough to break above the prior high and then close on lows. And I would hope that this pattern would change, and the way it changes is a little bit of a washout. So see what happens here with the IWM. It's like you can't get too bearish. Remember that whole little concept? Well, you can't get too bearish until you break and close below 108.70-ish, and if you do, you want to see what happens next. Does it come down, or does it briefly do it and come back in and keep this frustrating range? If it does break below, your next level really comes in back at old support around 106. And lastly, the bios. The bios have pulled back about 50% of that move that we caught. I do sell day threes because sometimes people that stay a little late lose their profits. But anyway, here was your take back the 50-day, the first move. You had a nice little flag type pattern here before that last spot. Then you had a little red dog reversal around this 285 pivot, and now it's come back into the 8-day. So here's the thing, guys. What I'd like to do is see if the market gets hit in the first 30 to 60 minutes, see if the bios get hit, and then if there's no downside traction and it comes back up, maybe you get a red dog reversal buy right here. So right down 271.80. To me, that's an important pivot. It probably shouldn't get much below this if the bios are going to be any good moving forward.
Oil is up again this morning after a big move from almost 36 to 43. Do you think it's a better buy or sell here?
I wouldn't chase oil up here, but it still might not be over. So I think guys are just starting to short it, and they might be a little bit in trouble, so to speak. But anyway, you look at the USO, and you'll see this was what also has been helping the market. Yesterday oil held up, and the market still pulled in. So we'll see. From here all the way up to this spot, the recent high on the USO is a little bit closer to what is this spot? This is 1080. So we'll see what happens here. If you want to write down yesterday's high as a pivot, maybe we get a small red dog reversal in oil. That pivot comes in at at 1034, which it's a little bit above. So I would rather see maybe sell it, and then if it if it gets back below this, maybe short versus that spot if you happen to have been long. If you guys want to look at something a little crazier to trade, the DWTI. Okay, I remember when a few different times when oil went to rally, we talked about getting short here on that day when the news came out at 2:30 on the February 11th bottom. That was another shortable spot, and then you had this little red dog reversal right here. Okay, so from here, from 197, it's gone all the way down to support here around 126. So maybe it's worth a look just for a scalp long. If you see oil start to reverse and go negative, maybe buy versus a level, but this is very fast. So yesterday's low is 123. So here is a red dog reversal at 197. Maybe get another one down here as it's a bit extended to the downside. But again, don't do the cost average game because I could put you out of business. Just do a level versus a level. So maybe there is a quick trade here, but a trade here could be $6 to $15 depending on the type of move we have.
High beta tech has been faulty and hard to trust ever since Facebook lost the 8 and 21 day. What are your thoughts on Google, Amazon, and Netflix?
Well, when you have the leader and the alpha dog under pressure, breaking momentum levels, it makes you think when you're trying to buy strength in other names. So you have to be a little bit skeptical. So Facebook, last week started to break down a bit. I talked about when it broke the 8-day and then the retest. Let me just show you on the chart so we can get to it. So that was right here. If you guys remember, this was the first little shot across the bow, but then on this day was when we were all long it, and then here's when I got stopped out of my swing long in Facebook. Okay, from there, wasn't sure, would it hold at 21 and just continue higher, or would it hold and make a lower high? And then remember that day, that was a big, very big failure, and it crossed below the 21-day pivot. Okay, and also this trend that we've been drawing broke. So that means you have to be very careful in Facebook versus just buy any dip. So now for today, it's up 20 cents. What I would like to see is maybe it pushes below this 108.77 and then comes back above and gives you a little bit of a red dog reversal just for a trade. At this point, it's very it's going to be there's going to be a lot of resistance, and it doesn't have to rally. So that's why if you just buy it all the way down, it could be troublesome. But I would say it's definitely worth a look versus spot. 108.70. So either it's going to hold above it and squeeze up a little bit, or push below it, put in some kind of pivot, and if it reclaims it, maybe you go with a stop with the low below. I was in Amazon yesterday. It was very tricky, and it still looks fine, but to me, I got stopped out. It looked like it was going to take out this, and did a topping tail to close on the lows. I guess if we do get early morning weakness, some guys might even short if it breaks below 594, because really then your next support's not down to 585. So see what happens there. It's still in this range, but it's just hard to trust when you have other names losing momentum. So if this breaks below this and you're really good at shorting, so maybe short right there. Google also, it is very choppy. 3 days where they sold strength, into resistance. If this happens to break to 755, it could get discounted, but you're going to need some heavy weakness in the market for that to happen. So, it's still in the range, and ranges are ranges until they're broken, but at this point it's starting to tell me that, it could get to the downside. So use that, if you're in it, at least as a stop, and if you're good at shorting, maybe you get a short below 755. And lastly, Netflix. Every day it has a a little bit of a push and baits people in, but ultimately the 200-day has been resistance, and it seems as if it's starting to round down. Okay, remember last time we had a nice trade here? Well, now it's just kind of rolling over with not much interest. In order for the shorts to really sink their teeth into, it's got to get below 102.62 and stay below it, but that hasn't happened yet either. Very choppy. The whole high beta tech landscape right now is very choppy, but has more of a vulnerable feel versus a constructive feel.
Right, and what about Apple? It had that quick spurt after the Barron's article and then faded into late afternoon. Are lower prices in its future, do you think?
Apple, it depends on whether their buyback machine's on. The stock went up almost $1.40 in the first 20 minutes and sat there the whole day. So if you bought a pullback thing, oh, you know what? That's probably not just the move for Apple. Barron says 140. It can't even get above 111. You got a little hurt. Like I worked my way into an Apple long on the VTF, and I was sitting in it, and I got stopped out in that last end of the day pullback because I didn't. I put my stop where the gap was. At this point, it's hard to tell short term what's going on here, because right now the 200-day has been rejecting it. You have a topping tail where it traded above a prior pivot, which was 109.77 and back below it, but it's still holding on to support. So there's not a heck of a lot to do. There's not momentum here. Like we like Apple when there's momentum. Here there was some nice momentum. Here broke above. You had 4 up days. Boom. Then it held. Okay. Then you had a nice momentum spot here too, where it held going sideways. It broke out. Got another day. Okay. And now it's just going back and forth, and it's definitely not much continuity. So we'll see what happens today. If the market gets sold, some guys might try and short below 108.83. If that's the case, make sure it stays below, and then your next support really is, the bigger support is really closer to 108.60. 108.60 is, this line in the sand that if that breaks, then 107.03 can happen pretty fast.
Tesla had two-way action, but has pulled back for 3 days. Will this be a focus for you again today?
Yeah, yesterday I think was a little easier because there's more fast money in it. Now that it's pulled back 3 days and a lot of the news is out of the way, there's not going to be probably as much interest or volume. But Tesla, it does move, and you might as well know what's going on. If you look here at the chart, this was your V bottom, and then here is when Citron put out their negative article and it squeezed through, and here was a good 3-day move to the downside that gave you a red dog reversal to the upside. And then it held the 8-day. It's been above the 8-day since. Small red dog reversal topside, which Chelsea and I talked about, when they came out their last reservations around 267, and now it's trying to hold the 8-day. So all you could do right now is know your pivot, 245.30. Does it trade below it and stay below it? Then get out of the way, because who knows, maybe it tries to come into this spot a little closer to the 21-day, or does it trade below, come back above it, and continue to give you a two-way action. Right now I think it's only a buck and a half, so we'll see what happens. I know they did a recall yesterday that was a bit surprising, that took some of the electricity out. And now again we'll just see what this, guys might be able to make money short if it goes through here and it makes its way lower, but take your trades off, because if it finds support and you get a pivot and comes back above, that's like what you said, Chelsea, that's what you call two-way action when a stock moves with a big range like that.
Right. And metals have been acting very well the last few sessions, which have been led by the miners. I know you were long in the GLD Friday. How's that for you? Are you still long?
I am still long, and I'm long less than I had last night, and it helped my day. And I'm not usually in gold, but when gold sets up, it's pretty cool. Or pretty cool. It's shiny. It could work out, and gold has been much better this year. And I've been, doing technicals on gold since I said to Mark Haynes back in 2008 when it was 850, you can go to 1500, and he laughed at me. But anyway, that was then. This is now. I look at the chart. Gold had a really nice, move to start the year when it reclaimed the 8-day and took back the 200-day, and then since has digested. Here's your support. It's been holding the 50-day, and then right on this day it was nice and tight. I'm like, you know what? I'm going to get back in gold. So all in all, gave you a nice, day, in a half trade, and now I would say if it could hold above yesterday's gap, I'll stay in it. Yesterday's gap is 119.42, and then if it does at some point, it should get back to highs. And one of the reasons why we had some confidence is look at the move in the miners. Miners blasted off. Here you had just the same thing to start the year, nice breakout, took back the 200-day, which ignited a new move, and then wound up holding this 19, and then it broke above this wedge pattern with a gap, and gaps that hold show power. And now look, at this point it's very extended. I would not be initiating a new position in the GDX, but if you're looking for a short, make sure it's calculated. You might as well use this pivot here, which is 22.79, to figure out if you can push through and come back lower, maybe you get a cute short. If not, just avoid. And if you bought it in here and added there, congratulations, you had yourself a nice technical move in the miners.
Banks have earnings tomorrow, starting with JP Morgan. Scott, do you think the bar has been set low enough for a relief rally?
Everyone's talking about that now. So usually when everyone's talking about it, it might not be able to happen. The banks have been out of play, and the market's done fine with it. They've been below most moving averages, and there's been strength in other sectors. Just the question is, what is the bar set low enough for these banks? And JP Morgan is first. So we shall see. If you go take a look at the chart of JP Morgan, you had that JP Morgan big buy, which was I think here, and then it wound up holding, going sideways, and since it's done a whole lot of nothing. So in order for it to be a real headwind to the market, and pressure things lower, I think JP Morgan's going to have to get below this 57. So that is, your support starts getting below and it's not priced in, probably hurts the broader indice. And if all of a sudden, it comes out and it's not as bad as people think, then this is, resistance 1, which is 58.88. Above that, it could make its way back towards the high of this move. It's still below the 200-day. It's still broken. So this is, this is what I would look at for tomorrow. Support, resistance, and sometimes there's a lot of false moves until finally it figures itself out in the first 30 to 60 minutes.
All right. Any other closing thoughts for us?
I know that I've had a frustrating week. So when I have a frustrating week, I try and do a little less and just try and get back on track. And I think that, I'm not saying I'm not making excuses, but a lot of traders had the same. Whenever you get these random misdirectional moves where, market closes on highs and the next day opens down and doesn't give you a way out, closes on the lows and then opens up and then stays up all day and then sells off at the close and you go back and forth, et cetera, not the easiest environment for active traders. Those who are sitting in swing positions and say, I don't care, it's a big range, it's loose and wide, and I don't care about the day-to-day, then maybe they're having a bit more success. But typically the loose, random, erratic trade that happens leads to some downside because that's what you call distribution. So we'll see. In order for there to be downside, you got to go to the spiders and see some levels. So here is your spot. In order for the bears to growl a little bit, you're going to have to see first the spiders take out 203.91. If you can get a close below that or a 30-minute close, then you have 203.09. Okay. And now at least you have defined resistance. So if you're trying to be short, maybe be short versus 206, and then if you think you could add, and adding's been tough, you better make sure you have technology week, bios week, Russell week, oil coming in order to be able to add for a bigger move down to where the 200-day is, which is closer to 201.90. But you might need to see some more earnings before they start breaking that.
All right. Thank you.
You're welcome.
Everyone, have a great trading day.